Hi guys, welcome back to the channel, the Daily Forex. So in today's video, I'm going to share with you another strategy for Boom 500 index. This strategy will make you grow your smaller account into a big account, and you can scalp the market and make profit and also avoid the spikes on this market. So I want you to pay a very close attention and listen carefully to what I'm about to share with you right now. Okay, now what we're seeing here, we're using currently three indicators, which is the RSI, the MACD, and the D-maker. Okay, the D-maker. Now, how do you make profit using this strategy? We're going to start with the MACD and the D-maker line. The D-maker line is this green line we're seeing right here. Okay, if you take a look at this market right here, for example, at this point right here, okay, if you look at this place right here, you see that this looks like a shape. This, if you take a look at this shape right here, it curves down facing downwards. This shape like an N shape facing downwards. Okay, now before you want to place a sell on this Boom 500 index market, what you want to do is that when this right side of this D-maker line curves down, it must touch this level of 10. This line, this green line right here, once it curves down on the right side, it has to be on the right hand side. Okay, once it curves down at this point right here, then you place a sell. Take just 5 candlesticks. You can take 4, you can also take 5. It should be 5. Okay, the maximum should be 5 because the spike might come into this market. Okay, if you take a look at this point right here, you can see that this line, this MACD line, is facing upwards. All right, and whenever the MACD is facing upwards, we meaning on the upward trends for the bull market, there is a multiple spikes. Okay, so we're going to be expecting multiple spikes on the market, and whenever it's facing the downward trend, the spike that is going to be on the market will be minimal. Okay, it's going to be less spike, but once it's facing upwards, there's going to be multiple spikes, meaning that the spikes that are going to come into the market are going to be much. Okay, and we're seeing right here that at this point, when this line curves down touching this level of 10 of the RSI, it's the MACD line right here. I've started creating a downward trend facing the down. Okay, facing the downward trend at this point right here. You can see from this line right here, it's already started going towards the downward trend. From this point, it was going downwards to this point right here, just as you can see. Okay, so when it starts creating a downward trend, and when the green line touches the level of 10, which is the MACD, which is the D-maker, this D-maker line, once it touches the level of 10, you immediately place a sell. Okay, forget about this spike right here. Okay, there may be some instance whereby there will be a small spike. The spike shouldn't be much on the market, probably taking away about 3 candle tips away, but you still make back that profit. Okay, count 5 candle ticks from the market, then you exit the market, because the spike that would come into the market may be big. Okay, so you want to avoid the spike as much as possible. All right, if we take a look at this point right here, I told you guys that it has to be the downside, not the upward trend. Okay, it has to be the downside at this point. Yeah, you can see here the upward trend of the MACD. It need to cross the upward trend, crossing down below, touching the level of 10. Then you immediately place your sell. Count away 5 candle ticks. Okay, the connection of the D-maker line need to be from the upward trend of the MACD to the downtrend of the RSI, touching the level of 10. Then you take a sell for 5 candle ticks at this point, just as you can see. It needs to be the connection between the upward trend of the MACD and the D-maker line, from the upward trend from here touching the downward trend of the level of 10. All right, you need to from here go downward immediately, then you place a sell for 5 candle ticks. 1, 2, 3, 4, 5. Don't worry about this little spike. There may be an instance where there will be a little spike on the market. Okay, and if you take a look at this point as well, the strategy, it works all the time. Okay, I've studied this strategy, I've used this strategy, and I've tested it. Okay, it worked for me, and I hope it's going to work for you as well. This is the upward trend of the MACD. From here, going back to the downward trend at the level of 10 of the RSI, you take your 5 candle ticks. 1, 2, 3, 4, 5. then you exit the market, taking just 5. Okay, if you take a look at this point right here, when the demarker line, when the spike want to come in, immediately this demarker line will go upwards. Okay, so it won't give you a signal when it's going to go upwards. All right, the only signal we're seeing here is a sell signal. So immediately we're taking our 5 candlesticks while avoiding the spikes. So we don't want to get caught up with a spike. Remember that once the spike comes into the market, the spike may be huge, taking away all your profit, and you might end up blowing up your account. So you want to scalp the market, taking advantage of small price movement as possible. Okay, taking advantage of those price movement as your profit as much as possible. Okay, so using this strategy and these few indicators, it can help you better understand how you can do this the right way. Okay, and don't forget that before you place your entries, you need to know where price is at the moment. All right, you don't want to place a sell where there is higher volatility, meaning that you don't want to place a sell at a point whereby the market could spike. All right, if we zoom out of this market right here at this point, we just zoom out of the market. Like I said, there's a connection from here down to this point right here. When you get to this point, we'll take our sell for 5 candlesticks. And if we take a look at this point right here, this is where price is at the moment. Okay, this is where price is at this point here. When it touched the level of 10, if we take a look, trace it to me guys, from here to the level of 10 at that point. So from here, you start counting your 5 candlesticks. All right, the spike has already come into the market, so before there will be another spike, it would take a little bit of time, because if you take a look at the previous market trend, there was a huge spike here before it sold again, and there was another spike. Okay, all happening during the upward trends of the MACD. Trace it with me guys, from here to this point. Let's zoom in a little bit. Right, you can see from here to this point, it's here. Let me trace it for you guys so that you can see properly. All right, from here you can see, from here, from this point right here is the upward trend of the MACD, and if you trace it upward, this is when this big huge spike occurred from here, and this other spike occurred as well during the upward trend of this MACD on boom market. Like I said, on the boom market, the spike would come in multiple times during the upward trends of the MACD. And if we take a look at this point, this is the upward trend of the MACD. Take a look at this point as well. This is the upward trend of the MACD. All right, and this is the spike. You can see this is the upward trend. At this moment, the market starts creating an upward trend, meaning the MACD starts creating an upward trend towards the upward side, and the spike came into the market. Just as you can see, it's an upward trend, another trend during the upward trend of the MACD at this point, and as we here as well, the upward trend of the MACD, so that you can see at this point, and here during the upward trend as well, there's a lot of spike. Okay, now we just confirm that spike have been happening, meaning the market have been buying for a long period of time. Okay, and at this point, you can see when the connection from here to this point, you take a sell for 5 candlesticks. Here, when there's a connection from here down to this level right here, down to this level right here, at this point, you can see to the level of 10, you count your 5 candlesticks. 1, 2, 3, 4, 5. Although there was a spike at this point. Okay, so sometimes it may happen like this. That's why I said you should take just 5 candlesticks. You can take 5, you can even take 4 to be more safer on the market. So I hope you understand what I'm trying to say to you guys. No matter the way you are trading, no matter what strategy you are using, there is always going to be a downward side towards that strategy. Okay, but you can see the accuracy of this strategy that I'm sharing with you now, that you can take 5 to 4 candlesticks successfully. So it depends on your trading style that you can be more profitable on the market. Okay, you can either take a trade, taking a sell after 2 candlesticks, you exit, take that profit, you place a sell immediately again, then you take that profit. Okay, if you take a look at this point as well, remember that it needs to be a connection from the upward trends to the downward trends. A connection from the upward trends to the downward trends. At this point to the level of 10, you take a sell for 5 candlesticks. All right, from here to this point right here, you take a sell for 5 candlesticks. It needs to be a connection from the upward trend of the MACD towards the downward trend of the MACD. Now you are using strategy. This strategy is not 100%. Okay, you can see that after the fourth candlestick, a spike came in towards the last side. Okay, so you can see the accuracy. Even though this strategy works, there's always going to be a downside to it, meaning that the market may spike, but the spike that will come into the market, it won't be that huge spike like it occurred on the upward trend on the MACD. The spike that will come into the market on the downward trend of the MACD, it won't be that big spike, meaning it won't be a huge spike that will happen on the upward trend, on the upward trends of the MACD. I hope you understand what I'm saying to you guys. Okay, so we're using for this strategy the RSI, the MACD, and the Jamaica line. Now I'm going to share with you guys the parameters that you can use. Okay, this is an easy strategy for you. This strategy is easy for you to scalp the market. You can use strategy to grow your smaller account. Okay, going strategy to grow your smaller account. Remember guys, on this channel I always tell you guys the truth. To whatever strategy you are using, there's always going to be a downward side. There's no 100% strategy that you can use to make 100% profit without a small loss on the market. No matter how you are trading the forex market or the boom and crash market, you're still going to lose a trade. Okay, you are still going to lose a trade. Probably you can lose like 2 candlesticks, 5 candlesticks. It doesn't mean that you have a losing trade for that day. No, you're gonna count more of your profits than your losses. I hope you understand what I'm saying to you guys. Okay, the real traders know this. Professional traders know this, that whatever they are trading, there's always going to be some amount of loss on the market. So they always know this, and that is how they can plan and manage their risk well on the market. Okay, I hope you understand what I'm saying to you guys. Now, to use the parameters, go to the section whereby you add the indicator, the RSI on period 14, you apply to close, the levels, level 90 and the level of 10. Okay, ignore this sell and this buy at this point. I normally use it on the crash market because that's the market I trade often. Then you for the style, you put it on 4 pixels, use the color of black, you use the straight line pattern right here, then you click on done. The style right here, you put it on the first pixel with the color white, right? Then you click on done. All right, for the Jamaica line, you put the period on 14, the levels 0.3 and 0.7. Okay, for the levels, right? The style, you put it on the pixel is going to be the color of your screen with 1 pixel. Then the style right here, you put the color on green on the level on 2 pixels. This 2 pixel right here. Okay, you put this one on this point. Then this line, you put it at this first one right there. Then you click on done. Then for the MACD, you put the fast EMA on 14, slow EMA on 24, MACD SMA on the level of 10. Then you apply to close. You don't add any levels. For the time frame, you put it on all time frames. The main color is going to be black. Then you put it on 4 pixels. The signal color red on 4 pixels. Then you put the straight line pattern there. You click on done. Okay, so I hope you understand what I've said to you guys, that no matter what you are trading, there's going to be some amount of loss on the market. For instance, if you want to catch a spike on the market, remember that if you want to catch a spike on the market, you are going to place a buy on boom. Okay, you place a buy, and before the spike would come, the market is going to be selling for a certain amount of time. Okay, and that is going to be counting you a loss. Okay, it's going to counting some losses, meaning your account is going to be minus, showing red. I hope you understand what I'm saying. Then if the spike that comes into the market is not bigger, or let me say it's not longer than the amount of sales that have occurred during the time that you have placed a buy, remember that you are still going to be in a losing trade. Okay, it doesn't matter if you are losing 10 cents away, or let's say 0.5 cents away. No, it doesn't matter. A losing trade is a losing trade. If you like, lose $1, lose 50 cents, 10 cents. If it's a losing trade, it's a losing trade. Okay, if the spike that you want to cash is not longer than the amount of sales that have occurred during the time you place that buy on bull market, you're still going to end up in a losing trade. Okay, so what I'm trying to say in this video is that even though you are trying to get 5 candlesticks and the market spike taking away all the 5 candlesticks you have gotten, is still a good strategy. Okay, it's still a good strategy. So I hope you understand what I've said to you guys. All right, so make sure you practice this strategy, you understand the strategy before you use this strategy. Okay, I'll see you guys on the next video.